Okay, hi. This is Shock Exchange, and this is Trump and the GE, where we discuss the economy and issues important to the community. I have with me Mr. Mitchell, Mr. Torian Mitchell, of course. And before we get started, I'd like everybody to like the video, subscribe to the channel, and share the videos. The picture in the video is a picture of Michael Milken, who was a known corporate raider back in the 1980s and early 90s. He also practically built the junk bond market from scratch, and with his junk bonds and his clients, he basically said he's willing to tee up all the blue chip companies on the stock market, including companies like IBM and so on and so forth. And he put the fear of God in a lot of people because he was going around finding undervalued assets and teeing them up. And Endo would have been a company he would have been all over. And so that's who's in the picture. And we think Endo is a great opportunity because the stock is currently undervalued. It trades under 7 times EBITDA, and its aesthetics business is very exciting. We think its aesthetics business could be disruptive, and also has other products that are about to come online. So we don't think its revenue. We think its revenue and its EBITDA is currently understated, and the stock is being manipulated by short sellers due to an open overhang, and that overhang could be dissipating pretty quickly. So we've identified about 8 companies that we think should invest in Endo. And Endo, as well as these other big pharma companies, have a fiduciary responsibility to put capital to work at high ROI. And Endo should be buying back its stock hand over fist. We think it's buying back shares. We'll know more when Q3 earnings come out, but we think it should be defending its stock, not only because it's a good investment. It's probably worth whatever way they put into the stock. And right now, it's probably worth 8 to 10 times what they'll get back in the future. So they'll get their money back 8 to 10 times once the stock begins to trade at fair value. But it also should be buying back its stock to defend itself against a corporate raider, someone like a Michael Milken. So we think big pharma should also be looking at ways to put capital to work at high ROIs, and one way to do that would be to buy Endo, which is almost a unicorn at this point. There aren't many companies that trade less than 8 times EBIT, less than in 6 times EBITDA range. So the first company we talked about was Barbarian number 8, which was a big pharma company that's growing revenue at about 3% year over year, which is pretty paltry, and they need to find a way to jumpstart revenue. It's one of its biggest products is HIV, and it's getting hammered by Gilead in the HIV market. Of its of nearly $6 billion in revenue, about 43% is related to respiratory, and 29% is related to HIV. And the aesthetics business is pretty nascent at 2% of revenue. And we think it could jumpstart its aesthetics business by buying Endo, of course. It may not get the chance, from what I understand, because now they have an activist investor that's taking a look at Barbarian number 8 and questioning its severe underperformance. And 3% revenue growth would be considered underperforming in this market. And I'm going to read a snippet from an article which highlights the activist investors' concerns. It says here, after plotting in secret, the activist investor finally made its intentions around Barbarian number 8 known. The activist investment group is calling for drastic changes at the drug maker to salvage Barbarian number 8 from what it calls years of mismanagement. And we think, we point out previously that an activist investor could also get involved with Endo as well. So this comes as no surprise against companies who underperform financially or have had their share price underperform. And it says here that Barbarian number 8 wants to sort of demerge its consumer health franchise and standalone business, but the activist investor instead wants it to consider sale of the business and use proceeds to fund R&D, pare debt, or buy back shares. And it also implied that it may have already lined up potential buyers. Those potential buyers could be for for its consumer business or for Barbarian number 8 altogether. And I think the media in Europe may see this as sort of a ruse that the activist investor may have plans to sell this company to a U.S. buyer, which could mean a short-term gain for the activist investor, but long-term it could mean job losses for Barbarian number 8 and his employees. And so you're basically shifting jobs from Europe to the U.S. and shifting business from Europe to the U.S., which wouldn't be necessarily good for the UK, for the European economy. So again, we've identified these companies that need to put capital to work at high ROIs. If they don't do it, someone else will. And as an active investor who's looking at this company and questioning management, why haven't you put capital to work? And this could prompt Barbarian number 8 to make a move on Endo or somebody else. But I don't think there's another company out there as attractive as Endo. So I'm gonna read you an article from Seeking Alpha on Gilead, which just made an acquisition in the oncology space for a company called Immunomedics. So it says in September, Gilead announced a $21 billion deal for Immunomedics and its Trodelvy, which is a treatment which has demonstrated strong efficacy with metastatic triple-negative breast cancer. Trodelvy could grow revenue to over $1 billion in 2024 and add to Gilead's oncology franchise. Strategically, the deal fits with Gilead's oncology aspirations, but it represents another foray at market heights. At 15 times 2024 revenue, Immunomedics could be costly. Immunomedics could limit Gilead's ability to go elephant hunting in the future. So Gilead just bought Immunomedics like back in the second half of 2020 for $21 billion or 15 times 2024 revenue if it actually gets to $1 billion in revenue. So it has to grow revenue to as soon as it's going to grow revenue 2024 revenue $1 billion, and Gilead paid 15 times 2021 projected revenue. There are no deals for Barbarian number 8. There's no way they can put capital to work in this market with a Dow at 35,000. That's what the Federal Reserve has done. It's helped drive up stock prices, but it hurt companies with a lot of dry powder to make acquisitions because they can't make acquisitions and get an attractive return on investment. Endo trades at less than 7 times EBITDA, and the EBITDA is understated, and the revenue is understated, and it has quote which is expected to be disruptive. Generic Chantric is not in the revenue or the EBITDA. Endo has at least 20 products that are expected to come online in Q4 of this year or the first half of next year that's not in the revenue or the EBITDA. So this is what Barbarian number 8 is facing. Either go out and buy a company at 15 times 2024 projected revenue, or get carved up by an activist investor.
It's feeling like 2014, 2015 again. Where we're going to start hearing about inversions all over again. That's what happens when you continue to pump up asset prices. I think I've stated before at some time on one of these episodes that when you continue to pump up asset prices, that even those at the top that can afford to make strategic acquisitions, well, now you just simply begin cannibalizing each other, because you are the 1% of the 1% of companies that have enough cash on hand, and at that point, you begin to eat into your own sector in order to drive assets even higher. Unfortunately, that is what the Fed, the environment that the Fed has caused. So it doesn't leave very much room on the table. So this is a very real scenario that Endo is facing. I think as the coming months, certainly year, especially after QE ends, Fed has already announced that they've accelerated the original November 2021 time period to hopefully end QE by July. So by summertime, that leaves us roughly about only 10 months, 9 months, something like that, left where QE is going to be in play. So in other words, what is that going to do to asset prices? For shareholders that are certainly, and even board members that are certainly used to seeing certain annual revenue rates. One of the hardest things to do is to feed you steak and then try to wean you off the steak to say, well, this chicken is much better for you. If if you are the only thing you want to really hear about is a higher quality steak, well, let's start getting into some Wagyu. Let me go ahead and start paying, $60, $70 an ounce for some Wagyu. You don't want to hear about it ribeye anymore. This is investors. This is the investor class. So while common sense would say, well, obviously market corrections are going to lower asset prices, and rightfully so. But inside of those boardrooms are going to be complete chaos, because you're going to have investors that are, frankly, some will be knowledgeable of macro events that are driving the revenue and just simply don't care. The only thing that they want is a high ROI. You fatten the cow on a certain diet, and now you're trying to wean that cow off of a diet. He doesn't want to hear it. He just wants to keep fattening and fattening and fattening. This is, as again, what Greenspan called irrational exuberance, where it makes you blind to reality, in other words. And unfortunately, that contention is something very real that management has to deal with, that board members have to contend with. So you're going to see these kind of arguments, these falling outs, certainly opening up the door for kind of the Carl Icahns of the world that have built their entire careers on being activist investors. And as I've stated before, the problem with an activist investor is like getting a snake to get rid of the mouse. And it's like, okay, cool, the snake can eat the mouse, but now you're left with a snake in the house. And so it's like, well, the next thing is to get a mongoose. So in other words, this cycle just continues to grow and grow, and it leaves the condition of the house further and further in decline, because now you continue to address long-term issues with very short-term solutions, and those short-term solutions chip away at the quality of the company. They chip away at the quality of the operations. They chip away at the quality of the policies that have allowed the company to grow. So in other words, it continues to take and distract the attention away from remaining either at a healthy place and simply adjusting expectations, adjusting revenue expectations to something that matches reality. And quite often, there is a deep contention. So in other words, how do you kind of prevent that, right? And the writing is on the wall. That's one of the reasons why we have continued to talk about and even kind of created this series, that these are very real conversations that are happening behind the scenes. It reminds me of a friend of mine who was Terminex, what do you call them? The pest control. And I'll never forget, he told me that by the time you see a roach in the house, it's already infested. Where, most people that have dealt with, insects in the home, you just see, okay, one, maybe two is not a big deal. But I guess the knowledge for pest control operators is that it's already so infested that they don't have room to hide behind the walls any longer. So they're forced out in the open. And that's the situation that we're dealing with, that these headlines have only become headlines simply because the infestation is already filling the boardrooms, or already filling the companies, and they've had nowhere else to go but the headlines, in other words. So while folks may look at one or two headlines and dismiss them as just that, the wisdom would tell you to take a look again, because once you see those one or two, understand that there's a real infestation happening. So these are very real conversations, very real contentions within the biopharma space happening, and especially among shareholders, that they're demanding better fiduciary responsibility out of management, that they're demanding better decisions be made. Some of the other subjects that are coming out of shareholders' expectations is even climate control. How are you dealing with labor crisis? How are you dealing with potential impacts of climate change? We're looking at West Coast filling with wildfires. The South continues to be flooded, dealing with hurricanes, and now even the Northeast continue to be hit with flooding from rains. Just even in New York, about a month and a half ago at this point, watching subways completely filled. Like you would think that it was Sandy all over again, and it was just 2 days of rain. That's it. It was a torrential rain pour, and it caused a massive flooding. So these are very real things that companies are going to have to contend with. And if you are not contending with them in a very real way, in a very serious way as management, then you're looking at potentially being replaced with folks that will. And that replacement may be by way of either replacing those individuals, certainly a CEO, certainly a COO, or replacing the company with another by way of strategic acquisition and getting scooped up. So, for me, these headlines represent the infestation of the conversations, the concerns that shareholders are expressing, and the pressure that is building up to ensure that, companies are focused on returning shareholder value, and buying a company for 15 times the hope of a 2024 beta level is insane. Like, I don't even know how else to frame it. That's crazy.
You're basically destroying capital.
Right.
Destroying shareholder capital.
Like, how do you even justify that? But one can almost see how, when you understand what's happening behind the scenes, the pressure, essentially everything that I just laid out, it's not leaving companies very much room to make financially healthy decisions. So you're left with kind of shooting in the dark, in other words. And that's really what this acquisition represents, is a bit of a shot in the dark, and you're keeping your fingers crossed to hope that you can get this company up to $1 billion in revenue by 2024. So now you're also under pressure to perform against your own revenue expectations that you've essentially marketed to your shareholders. But what does that do to the existing pipeline? And like we've already stated, Gilead's specialty is buying at the top of the market, it seems like, because they've been doing that for the last decade at this point. So the amount of money that they continue to spend in R&D as well, like, in other words, the sacrifice is going to come somewhere. So something is going to get pushed back. Some objectives are going to get pushed back that are already existing internally within the company, in order to meet the pressure of the demand to justify the acquisition that they've just made. So this is the reality that companies are facing, in other words, and that pressure can cause management to make some pretty grave mistakes. So to me, this is one of those, obviously I could certainly be wrong, that maybe this will be the greatest acquisition that Gilead has ever made, and turn out to be one of the greatest companies on the planet. But I think you'll forgive me if I don't hold my breath on that. But needless to say that Endo being a part of that conversation, and even a part of this activist investors radar for Barbarian number 8 lets us know and just kind of validates that Endo is a acquisition target, that they are a part of these conversations, that M&A teams internally are looking at actively looking at Endo and actively looking at some form of an acquisition. So really, again, the question just kind of boils down to, for management, as we said even in the previous broadcast, do you simply lie down and give up at these price levels? And I don't think that shareholders would be very happy to have to make a vote on whether they want to go through with an acquisition at these price levels.
Exactly. So, a little more granular level on granular analysis on Barbarian number 8's aesthetics business. It generated about 140 million in Q2 revenue. On Endo's aesthetics business, what we call Xiaflex and Quo, generated about 120 million in Q2 revenue, and it grew about over 50%. And part of that's because Quo is still in the startup phase, while Barbarian number 8's aesthetics business grew revenue about 7%. So Endo represent about its combined basis, they would have 260 million in revenue, growing at 27%. So Endo would actually jumpstart Barbarian number 8's aesthetics business from 7% revenue growth to over 25% revenue growth. And this doesn't even include, again, the potential for Endo to disrupt the $15 billion aesthetic space, and the potential for Quo to grow by leaps and bounds. So Barbarian number 8 is sort of facing a quandary. Either it can try to sell high-wealth businesses at the height of the market and hope somebody overpays for its businesses, while central banks are talking about ending QE, and hope there's a mullet out there, somebody with dumb money to overpay for his businesses, and as the economy potentially will decline going forward, or at least consumer spending will likely decline, because consumers probably won't spend like they were spending prior to the pandemic. They've seen what it looks like. That a lot of them can't really go too many paychecks before they hit hard times. So they're probably going to tighten the belt, which means that it could be difficult for Barbarian number 8 to hive off any consumer businesses at all, and they could really be embarrassed to go out here in the marketplace to try to sell something at these levels. So it's either stuck with trying to hive off assets, which I don't think is a good idea, or try to make another acquisition at 15 times 2024 revenue like Iliad, or buy Endo at less than 7 times EBITDA, and they could keep this activist investor at bay. Otherwise, they could be moving their headquarters to the United States, and everybody won't be going with the company.
Okay.
So these are real conversations. These are real issues. You have to be proactive. Short sellers in Endo have been proactive. They've been manipulating stock over the past 4 years, and it seems like they're because of the opiate overhang now, it seems like they see the handwriting on the wall as these opiate deals start to come in. Endo just settled with Louisiana. They settled with New York for $50 million, which was a very cantankerous sort of back and forth with the state AG in New York. And there could be more settlements on the horizon, or even a global settlement prior to Endo's earnings. And Endo's earnings is probably going to be phenomenal for Q3 and Q4. So looks like the short selling is starting to dissipate. But there are a lot of shots on goal for Endo shareholders. A lot of shots on goal, a lot of potential catalysts to drive the stock higher and to force shorts to cover more, where you could have, again, strong Q3 earnings. You could have more settlements, even a global settlement, and also Endo unloading the clip where they're buying back their own stock because they realize the value of Endo, they realize the value of their own stock price. This is probably best it's going to get. Whatever capital they put to work buying back their own shares at $2.50, $3, $4 a share, they can get it back 8, 10 times fold down the road as Endo begins its traded share value, fair value, which we think is $25, $30 a share. So that's the short answer. And if Barbarian number 8 doesn't make a move, this could be it could be the subject of a business school case study.
Yeah, I don't think anybody wants to end up as a squared off footnote at the top of a page in B school, like Blockbuster.
Right, so I'll give Mr. Mitchell one last parting shot.
Yeah, I mean, I think we've pretty much kind of said it all at this point. That this is the reality of what's happening within the space, and really the greater writing on the wall, because obviously, although we're focused on biopharma, but this is really industry, sector, and market wide, that every business is going to be dealing with these same exact factors. Every publicly traded company, and frankly, even private enterprises still have to make the same decisions, especially those that have either been acquired through private equity or have raised venture capital, or has raised any type of cash through private investors. So there will be a bit of a reckoning if financially healthy decisions aren't made that make sense for the current environment. And we're going to see winners and losers in every sector, in every industry. Some businesses, within the next 3 to 4 years that seem alive and well today, they will not be here 3 to 4 years later, simply because they made the pitfalls. They crumbled to the pressure of not making decisions that they knew were better for the company. And sometimes, management has to make decisions that kind of defy shareholders, because if shareholders are so focused on the short term, and those short term decisions end up rotting away the company in the long term, that's where some of that headbutting can happen. But the long and short is that both shareholders as well as management board have to look beyond the immediate, looking to the next 5 years, looking at, well, how do we get to these objectives year to year to reach that 5 year overall strategic objective. So, getting essentially folks on the same page in order for companies to continue to survive. So this isn't unique to publicly traded companies, certainly not unique to biopharma or Endo. We're going to be seeing these decisions even in mom and pop companies, as we saw with the pandemic, that they're subject to the same factors. It's just that typically privately held entities, certainly smaller businesses, kind of mom and pop shops, feel it and kind of get the swift of the knife much quicker than publicly traded companies, because they at least are insulated by shareholders, by having a market that backs them up. And, certainly when you have, Fed chairman's front running, then, you can breathe a little bit easier. Unfortunately, Fed chair didn't decide to front run any family owned, dry cleaners or or car washes or restaurants. They decided to front run front run some essentially assets that are backed by tax dollars, which I suppose if I'm going to front run something, then let's go ahead and front run kind of the guaranteed money, right? It's like come hell or high water, state, municipalities, federal government, they're going to continue to collect taxes. So, I guess I can't argue with the decision that if you're going to break a law, then I guess break a law with something that's sort of guaranteed, such as munis.
Right.
But unfortunately, the founder, the owner, the that works, 12 to 16 hours a day in their business on a daily basis, rarely gets vacation, is there for every single day that you show up to that restaurant, to that corner store, to that bodega. The lifeblood of the economy, because they can't afford to take 2 weeks, three
Right.
weeks
Right.
vacation. These are the businesses that get hurt first. These
Right.
are the communities that get hurt first. But they still have to contend with the same exact decisions that publicly traded companies have to make, in understanding what are the pressures. Are we meeting the market and the current conditions in order to stay ahead of it? So, in other words, sometimes you have to look outside of that tunnel vision, take a step back, and look at the bigger picture to see that, whoa, okay, it's not just these one or two instances, it's not just one or two headlines that are talking about something that can seem innocuous, but this is a real infestation, and it's just now oozing out into the street because there's nowhere
Right.
else to hide this conversation.
Right. So that's some pretty good wrap up. So I mean, like we said before, this isn't putting capital at risk at high ROE, high ROI is not a just a want. It's a need for Endo. It's also a need for big pharma. It's also a need for people who are in the aesthetic space or want to be in the aesthetic space. So this could get pretty interesting. This could be the first shot across the bow, but there are a lot of shots on goal for Endo investors, whether it's share buybacks, someone taking a potential strategic investment in Endo, or approaching Endo, or a global opiate settlement. So this could be pretty interesting going forward. So we've done our best we could to provide professional research that Michael Milken or Carl Icahn, a a or barbarians from the 1980s and early 90s would have done. So this is basically it. So this is Trump and the G, activist investor shakes up barbarian number 8. So we'll see you in a couple of weeks. Thank you.
Yeah.